Good evening, ladies and gentlemen. My name is Monica Kamunde, aka Magical. I change people's lives by offering financial advice and financial solutions. Welcome back to my YouTube channel. A few months ago, we started a conversation about our money, and we started by learning how to manage our money using the big five. If you recall, and if you've not watched my previous videos, I welcome you to have a look at them. After that, we embarked on looking at the principles of investment. And the first principle we looked at was the principle of risk versus returns. So, the trade offs that you need to do when you're doing or starting an investment. So today, ladies and gentlemen, I'd like us to look at the second principle that focuses on the fact that changing investments is expensive. So, as an investor, you need to have a long-term strategy. Having a long-term strategy helps you achieve your goals, and it helps you avoid making emotional decisions, because most of the times when you make emotional decisions, you end up changing your investment or business options haphazardly and in a very emotional way, and most of the time it's quite expensive. So for any business venture to give you the desired results, and the desired result in most of the business is profit, you need a lot of discipline and consistency. And hence, the reason we are looking at this principle of having a long term strategy. I want us to picture this. Picture a farmer or someone who decides to go into farming. So this person goes to the cereals board and buys grains to plant. Assume that they buy 20 kgs of grains at maybe around 4,000 shillings to plant on a 2-acre piece of land where they maybe expect to harvest 80 kilograms of maize and sell a kilogram of or a bag of maize at, let's say, 4,000 shillings. So if you do your mathematics, that's a good business. That's a good return. From the amount they'll use to buy the planting seed to the returns they'll make by selling the 80 kgs of maize in 3 months. Assume this farmer then comes at the end of the first month. Maybe they've met their friend who says, "Oh, look here, I'm doing cattle rearing, and it's giving me quite some good money." And so emotionally, this farmer, maize farmer, gets carried away and decides, look, now I'll now cut down this maize and go into cattle rearing. Truth be told is that this farmer will have lost the initial capital, including wastage of time and all the resources that they have used therein. And hence, we are saying have a long term strategy. You can also look at, for instance, an investor who decides to get into the stock market. Stocks, where you're buying shares from counters that are listed in the stock exchange. So, when you put in your first initial capital, there is the initial fee. So assume this person puts in 1 million shillings for the start trading, and then 1 week down the line they say, I think I want to pull out of this investment. So in this case, that person will end up losing, because remember they've already deducted the initial fee, and their money has not made a return on investment, and hence again I emphasize the importance of thinking long term to avoid losing on your money. And so, what can you do as an investor to um, harness uh, the ability to think long term? How can you be able then to stay in for the long haul? The first thing is you need to have a goal. Yeah, because when you have a goal, then it guides you. You have to stick to that project, that investment, because you have to achieve your goal. If you said the goal is to buy a piece of land in the next 5 years, if you say it's to build a retirement home, that goal then guides you to stick into that investment that you began, or that business that you began. The second thing is that you need to diversify your investments, so that such a way that if one of them is not doing well momentarily, you're able to gain returns from the other investment, and hence you'll not have the need to cancel the investment or the business. The other thing you need to know to do is that you need to stay in the know before you begin that investment or business. Do your research. Again and again, we've talked about researching, studying, asking questions before you start that business or that investment. The other thing you need to do is you need to stop making emotional decisions. At one point, you wake up and your business is not doing well. You don't have to close it haphazardly because your emotions are now feeling that you're not happy with the business. You have need to stop making those emotional decisions that are based on short-term down times in the market, or fluctuations, or during bad times. Yeah. So it's always good to think long term. The other thing you can do is look for a professional in any sector you're in. Every sector has professionals, and this professional will sit down with you and help you come up with an investment model or a business based on your risk and your current situation. So the question is to ask yourself before you start that business or investment you want to, ask yourself, am I in it for the long haul? And I leave you with that. I welcome you to watch my previous videos and subscribe, like, and share. Thank you so much for creating time. Have a good evening. Bye bye.